QuickBooks Pro Desktop 2021. Fixed asset items. Fixed purchase of furniture recorded without fixed asset items. In other words, there was a purchase of furniture, it was recorded without the use of fixed asset items, so we don't have the detail that would be provided with those included. How can we fix or adjust that after the fact? Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our fixed asset practice file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're going to be purchasing property, plant, and equipment. We're going to record it first incorrectly or without the use or added detail of the fixed asset items, and then we'll think about how we can add that added detail for the functional purpose of providing it to the tax preparer and recording the proper depreciation to it in after the fact, after it's been recorded without it. So this is what we're going to purchase. We're going to be purchasing from Amazon here. We have this nice desk that we're going to be purchasing, and then we're imagining here. And then we have a sofa that we're going to purchase, and then we have this office desk that we want to purchase. Now, if we add those three up, we're going to say that it adds up to the total amount that we're going to pay of $3,226. So let's say we just paid cash for those three items then. What would happen is we would buy it, if we bought them from Amazon, we would buy it electronically here. We would write a check, and the easiest way to do it would simply be that we're going to write a check. Now, it would be an electronic payment, but we would still use a check form to decrease the checking account. This would be going to Amazon. I'm going to quickly add Amazon as a vendor here, and then we're going to say that the amount was $3,226 that we're paying for. And then the easy way, the most likely way to record it is just to record the other side as one lump sum amount for those three items that we purchased, which you could actually categorize as more than three because one of them had like chairs involved in it and stuff. So in any case, and then we're going to put it up here into our furniture and fixtures. Remember that we did break out our property, plant, and equipment into these subcategories to line them up to the depreciation categories that we think would be on the tax software in the tax software side, which would help us to record and calculate the depreciation. So I'm going to put that into furniture and fixture. And then in the memo, we might list out something in the memo to give us at least a little bit more information. We know it's furniture and fixture because you put it into the furniture and fixture thing. So, but we might say that we got a desk, and table, and desk, table, and the last thing we put couch. So that's not much description, but at least it's something, right? So if I was to record that and say, okay, let's see what that'll do, this will decrease the checking account. The other side's going to go into the furniture and fixture. However, it's going to group it into one lump sum, which may be okay because it's all going into one category, which is going to be depreciated over the same useful life. But we would still like to break it out because it's likely that one of those things will depreciate or need to be sold or disposed of in different time periods. So it'll cause a problem in the future if we don't break it out now, in other words. So if I say save and close and say yes, so now I'm going to go up to my reports. I'm going to go to my company and financial and take a look at that balance sheet standard, changing the dates up top in the customized area. And then I'm going to go from 01/01/21 to 12/31/21 and okay. Then down here in the fixed assets, now we have our furniture and fixture there. There's the $3,226. The total is correct. But if I double click on it, then I have this one line item and the memo simply says desk, table, and couch. Now, if I give that to my tax preparer at the end of the year, what are they going to do with it? One of two things. They're just going to add it into the line item and depreciate it all as if one line item. That would be the easy thing to do. Or they're going to ask us, hey, what was the cost of the desk, table, and couch, which would be the proper thing to do, and the thing that would most likely save time in the long run, because you'll run into problems if you don't break those things out, because when you dispose of them or sell them, they will not be sold or disposed of together, and they will have accumulated depreciation attached to them, which is the problem. That's going to be the difficult part, to assign the accumulated depreciation to three things that are all different that were lumped into one category. I mean, it's possible you can but in any case, you don't want to do that. So then, how do you break that out? Well, what you'd like to do is give them the list, which would give them this detail. So instead of just this little detail here, you want to give them some kind of list. So I'm going to close this. That's usually done with our lists drop down, and one way we can do it is with our fixed asset item list. Now, the other way you can do it, obviously, is you can save the receipts, you know, for the major purchases you have, and I would do that and attach them for these 3 items and say, hey, look, these are the big things I purchased. Anything that you purchased and you put into property, plants, and equipment that's going to last more than 1 year, save it, provide it to the tax preparer so that they can, you know, have that detail. But you can also list that detail here, and so that you can tie it out. Now, if it has already been entered, there's 2 ways that you can change it, right? I could then say, okay, I want to go back in and fix this, right? I could say, so I give more detail. I could go into here, double click on this item, and then I can remove this amount and instead go to the item list and add the 3 items to properly break it out. That would probably be the best way to do it, although it's a little risky because, you know, you have to go back in here and change an item, and if this check had already cleared or something like that, maybe you don't want to go back in time and fix it. And if you're fixing a bunch of these items that happened, say, in the past, in prior years, it's probably not worth your time to fix it that way, but might be worth your time to just add the detail in the list. So I won't be able to break it out here, or maybe I decide not to, and therefore it won't show on the detail in this area as it does, for example, when we did our machinery and equipment. We purchased all this at one time and it broke out the nice detail and gave us our memo list. We won't get that, but we can still line it up and give the added detail by just adding the items here. Now you'll note this list will of course be off. It's not including any furniture and fixture. We haven't added any yet. So I'm just going to add those 3 items, you know, one at a time, and then this list should line up then to what is on our balance sheet. In other words, our balance sheet lines up to, or adds up to, $3,226. Our fixed asset schedule, once I add 3 items, will then add up to that same number. So let's just add 3 items. I'm just going to go item list. And by the way, this is the same way you can fix prior years if you're taking this information, say, from prior year depreciation schedules provided by your tax preparer. You could then adjust the prior years to fix this. Why would you want to do that? Because it may not affect anything until you sell something. When you sell something, then you want to be able to identify what you sold. So the prior year could be important in that case. When you sell or dispose of something, it'll become an issue. So then I'm going to go to the items, rise up. I'm going to say new, and we're going to add these items. So the first item, name, I'm going to call it, this is what they called it. And you might just start off with basically desk, and they give you some limited space. So I'm going to delete some of this, and I'm just going to say desk, and then add that. And then you might, if you have any kind of serial number or purchase number related to it, put that there. Any more description, then I would add the added description detail here and here, so you know exactly the item that you're looking at. Any more notes? This is, you know, where it is, location. So this may be Sam's desk, you know, or something like that. So you at least know where the thing is. If it has a number related to it, you can put the number, although the number might not last on something like a desk. The date that we're going to say that we purchased it, if I go back to my balance sheet, I put this in as of we said this was the desk on 2/16 again, so I'll keep that. So we'll go back into our asset item and new item. I'm going to say this was on 02/16/21. The cost of that is $753, we're going to say. And the vendor, I'm going to say Amazon. And then the asset account that's going to be affected is going to be the furniture. So we'll say furniture, and that looks pretty good. Then I'm going to say save and new. So I'm just going to say next, and then ignore all this stuff. That's what they called it. It's misspelled. It's not my fault. They said it was called that. And this is going to be a couch. So you couch home leggings. I'll do that. And maybe again, if you had some kind of purchase number, then you'd want to put that there, and then add the more detail so you know which couch you're talking about. Here, maybe it's in the lobby, and then the serial number if you have one, so that you can put the purchase information there. Make it as easy to, if you have any problems with it, to talk to the vendor about it. you know, so know exactly what you're talking about. 021621. This thing costs, we're going to say this thing cost us the amount of 1126, and the vendor, it says Amazon, and then that looks pretty good. So I'm going to say next one more of these things, and again, that's how they said it was spelled. It was on Amazon's page like that. And this is going to be the table. I'm going to say this is a conference table and chairs. Now note this came with chairs. So you might say, well, you should be, I mean, we could break out the chairs, but I would think the chairs are somewhat immaterial compared to the cost of the table. So in this case, I'm grouping some things together, which is kind of against my rule here. Because what if I dispose of one chair? But the one chair I'm assuming is immaterial compared to the table. So I'm going to go ahead and group them together. So location is going to be the boardroom. That's where the board table goes. And then we're going to say that this is on 021621. Cost is going to be the 1347. And the vendor Amazon. And so that looks pretty good. So then I can say okay and ignore this stuff again. So there we have that. Now those should then line up. So I would then make a report of this when you're providing this then at the end of the year to your accountant for tax preparation and financial statements, for example. We can then say, I would like to see a report of this, and I want to see the fixed asset listing report. And now it's in order, you know, you've got the automobile, the machinery, and equipment. Then I would change the order up top to by account. So it's ordered by account. So now we have the automobiles, the furniture and fixture. If I was to add up the furniture and fixture and whatnot, it should then line up. So we have these three line items here, which are the 1347 plus the 1126 plus the 753. I wish they would add those up for us, but they don't. That's going to be the 3226 going to the balance sheet. Then we've got the 3226 over here. So when we provide this at the end of the year, we're going to say, hey, look, this is the 3226. They will have whatever was there last year. What they're concerned about then, what were the new purchases and disposals of in the current year. Instead of double clicking on this and giving them this detail, which doesn't provide the detail because we didn't use the items to do so, we just have this memo that doesn't give enough detail. We will instead provide the fixed asset list, which will give that detail for it, and that should be good. The other way we can do it, remember, is if we were to have entered it using the items, such as we did in a prior presentation, it would look like this. Instead of having one line item of the 6007 in this purchase, we have it broken out because if I double click on this, in this case, we did not just use the expense, but use the items. So either way, you should be okay with it. You know, it's not the end of the world if you recorded something that wasn't broken out this way. That just means that hopefully if you have a good tax preparer, they're going to ask you and say, well, I can't, this needs to be broken out between three items. You got to give me that detail somehow. Either give me the purchase documentation, give me the three amounts so that I can break it out, and give me as much detail as you can so that when you sell it, it's going to be as easy as possible. Now, also note that if you go to the fixed asset listing over here, the list, you can also attach the items. So if you had a purchase documentation, you can attach, like you could take a PDF of the things you purchased here, of these three items, or the purchase receipts of it, and you can attach it here. And then when you talk to the accounting firm, if you were to, you can either print these out when you're done at the end of the year, or if you provide them a backup of the software, they can then look at the attachments for you. I would provide it to them. I would print it out and provide it to them, but you have that option too. So then, obviously, what you want to do at the end of the time period is get your report here. I would export this report. I would create another worksheet to export this report so we can provide the subtotals that give the activity that will line up to what's on the balance sheet and or line up to the current changes that happen to the balance sheet, the current year purchases and or sales. So that would look something like this, and I would just add them up. You say, okay, here's the autos. That should tie out to the autos. Here's the sum of the furniture and fixture. Here's the sum of the other item, the equipment and computer. And if I was to add these up, total, here's the sum of the total. And that should equal this way and that way. And so there we have it. So then 45,000, 3226, and 67. So we got, if I go back to the balance sheet, then we have the 45,000, the 3226, the 67, and the 5496 total. So there's the 54926 total, 54926 total. Now again, if that doesn't tie out exactly, you want your sheet to at least tie out to the change, the difference, what happened in the interim from last year to this year, because assuming you have the same tax preparer that you did last year, they have the prior year data. They need to know what changed from last year to this year, what was disposed of, what was purchased.